The Robinhood Ventures Fund IPO is next week. Are public venture funds like RVI, VCX, and DXYZ the new standard for startup investing for retail investors? In IPO Radar news, defense tech is hot as Shield AI raises and Anduril seeks a $60 billion valuation. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs. IPO volume has slowed a little bit here due to the SaaS or software stock volatility and the cryptocurrency uncertainty. But while the traditional IPO pipeline has slowed a little bit, we have this new wave of public venture capital funds that are going to be entering the market in the next few weeks. Last week's show, the focus was on the Fundrise Innovation Fund, the VCX fund, and we're anticipating that to IPO in March. But just this week, we heard from Robinhood. They kicked off their IPO roadshow for the Robinhood Ventures Fund 1, ticker symbol RVI. And it turns out Robinhood is going to beat Fundrise to the market. We mentioned Robinhood last week and RVI. At that point, it looked like Fundrise was going to make it to the markets first. But now that Robinhood has kicked off its IPO roadshow and set an IPO date, Robinhood will make it to the market first and will attract significant investment dollars from retail investors. Robinhood launched this retail roadshow, they're calling it, on Monday with the release of their N-2 SEC filing, and you can get that on the SEC website. And if you're interested in investing in the RVI fund, that document is required reading. They did a live stream on Tuesday this week to help investors understand what's going on. But this is a complex security that requires very detailed SEC filings, and Robinhood is doing a very good job of just simplifying it so that they can reach their target investor, and that's retail investors, ordinary investors like you and me who want to buy this thing on the open market and potentially in the IPO. Much of this episode is derived directly from that SEC filing because I was on a long flight and I had an opportunity to read through it, and it's changed the way that I'm looking at these closed-end funds now, including VCX and DXYZ, and I'll explain how my views have changed a bit toward the end of this segment. So Vlad and his team did this live stream on Tuesday, and I was driving a rental car with the family in the back in a rainstorm in San Francisco, trying to listen into this webinar. Vlad did an intro. CFO Shiv Verma was there, and the RVI fund portfolio manager was there. Her name's Sarah Pinto, and the three of them did this live webinar streamed through the app and on YouTube, and it's definitely worth checking out, where they explained some things about the fund. They talked about the various investments that are seeded into the fund, and then they answered some very softball questions at the end that I didn't think really covered a lot of what some of our viewers want to know about the fund, but did cover the very basics of the fund. So check out that live stream if you haven't already. So this fund is targeted at non-accredited retail investors who tend to be not all that sophisticated. I think we'd all like to think we're more sophisticated than we really are, but we are retail investors doing our best, holding down a full-time job and investing the best way we can. But we're not professionals. We're not Wall Street professionals. And the way they described this fund was really targeted at their targeted audience, which is most of their customers. And I'm actually very excited about this trend and this particular fund because from the beginning, I've always wanted to see more access to pre-IPO companies, more access to IPOs for retail investors. And Robinhood is leading the way with that same mission, democratizing access to retail investors. And this new wave of public venture capital funds is giving us the opportunity, giving a broad range of investors the opportunity to invest in some of the most innovative companies of our time that would otherwise be out of reach. So watch that live stream for some of those softball questions. I'm going to try to answer some of the more complex questions that maybe they didn't talk about on the live stream, or questions that we have from our Patreon community where our members are discussing these funds and sharing resources they find and asking questions and answering questions. So the Patreon community, our Access Club's great resource if you're considering investing in one of these funds, either in the IPO or after the IPO. A couple key facts about the Robinhood Ventures RVI fund, and you can get this all from the SEC filing. This offering is 40 million shares at $25 per share. So they're looking to raise $1 billion for this closed-end fund. They've already seeded this fund in 7 companies right now and soon to be 8. The money they raise from this IPO is going to go into cash, and they're going to use that cash to buy more startups. Now, Vlad had initially said they were expecting these funds to be somewhere around 5 to 6 holdings. They're already at 8, and they're about to raise $1 billion. So I expect many more holdings than just 8 or 9. This could could easily get into the teens or up to 20 holdings. Now that reduces concentration risk, but it also reduces the potential upside because you have a lot of different companies in the fund, just like a mutual fund. If one performs really well, it's going to help the fund, but some of the lower performing funds are going to hold it back. No investment is going to make up more than 20% of the fund, at least at the time of the investment. If the company surges in valuation at some point, then that might become more than 20% of the holdings of the fund. So as Vlad said in that live stream, this is just the beginning. That $1 billion is a lot of money to invest in startups. And most of the investments so far have been in the $15 million to $25 million range. So either they're going to be doubling down on some of these key holdings, or they're going to be adding new positions that are going to be significantly larger with this $1 billion to invest. The investment objective of this fund is simply long-term capital appreciation. They're going to be investing in these startups directly on the cap table when possible, but in the filing, it listed a slew of various types of investments they might invest in, and that could include SPVs or preferred stock or common stock or ETFs or other types of equity. And for most of us, that doesn't really matter, but it could affect how the fees affect this fund. We'll talk about fees in a little bit here. So with that long-term capital appreciation objective, these are going to be long-term holds. There should not be a lot of turnover in this fund. The filing addresses exits, and they address this in the FAQs of the live stream. If they own equity in a company, the fund managers will determine whether or not to liquidate some of those shares in the IPO and distribute some of that to investors, or if they're going to hold while these companies are public. It's possible they're going to hold some public stocks in the fund as well, just like the Fundrise Innovation Fund holds ServiceTitan after that IPO. So fund managers are going to be making a lot of decisions here. So when you invest in this fund, you are giving your money to this fund manager, Sarah Pinto and her team, and Vlad, of course, and their connections in Silicon Valley. And Vlad mentioned that in the call as well, that this hasn't been done because very few companies have the kind of access that they have in that Silicon Valley network in that venture capital world. So management will be using discretion if there's an IPO or if there's an exit of some kind. Now, regarding fees, there is a 2% management fee, and I've seen a lot of criticism of the fees already on Twitter about this fund, and the VCX had to raise their management fee as well. When you're investing in private assets, whether it's through a syndication network or on one of the pre-IPO platforms, there's going to be a fee, a management fee, and there's going to be a carry, which is a fee on the increase of the value of your investment. This fund doesn't have a carry fee, but it does have that management fee, and there's a front-loaded fee as well. And if they buy into LLCs or certain SPVs, may have carry on those. So there could be additional fees that we don't really see as retail investors as this thing is trading publicly, but when you dig into the filing, there's a lot of information about it. There is an example of a $1,000 investment into this fund and what the fees look like over 10 years. So take a look at that because the fees are going to impact returns. But when you're investing in private startups and venture capital, there's always going to be a fee, and it's often much higher than what we're going to see in this fund. As the fund scales and grows and figures out how to streamline its operations and management, Robinhood has a pretty good track record of reducing fees for retail investors. So I do think if there's an opportunity to lower fees, they're going to do it. But it may take some time. They may need to raise additional funds. This first billion is just the first step, but there's going to be opportunities to issue more shares and raise more money in the future. So as the fund grows, potentially there's an opportunity to lower the fees. 7 of 8 of those seed investments are already Access IPOs Radar companies. You go to accessipos.com/radar and you'll see these companies as startups that I've already researched and followed. And as I've been researching companies over the last few months, I've started to see Robinhood Ventures pop up as an investment partner, as an investor in these various rounds. And I did mention that last week in the VCX episode. 4 of the companies that I saw on Caplight are included in this fund. So there are 7 startups that are going to be included in this seed fund. They've also announced that Stripe is going to likely become part of the fund after the IPO. And those 7 startups are Databricks, Revolut, Ramp, Airwallex, Aura Ring, that's the wearable ring for fitness, Mercor, Boom Supersonic, and then Stripe is the 8th one. All of those are on my IPO radar, except Mercor, and Mercor will likely be on the radar by next week. It was already in the pipeline of companies that I was going to write about, just hadn't gotten to it yet. Vlad and the team spent some time talking about these companies in the live stream. They're doing some short little interviews with the founders and CEOs of these companies to help promote this fund. The IPO is already scheduled for Thursday, February 26th. IPO access is only available on Robinhood. So a lot of times when we have a traditional IPO, the shares are available all over the place. In this case, this is Robinhood's fund. They're keeping all the shares to themselves. They're going to distribute the IPO shares to their investors. And so a lot of us who have already invested in IPOs on Robinhood, we know the process. If you're new to that process, I have a video where I show you how to reserve shares of an IPO at Robinhood. To raise approximately $1 billion, that would take about 500,000 Robinhood customers requesting shares at about $2,000 per person. So $1 billion is quite a lot to fill. So if you are investing in this IPO, if you're thinking about it, I don't anticipate this is going to be like the other IPOs where you get 1 share or 0 shares or just 10% of what you've requested. Robinhood has a lot of shares to distribute. In fact, they have all of the shares to distribute. So if you're going to put a request in, I think it makes sense to request what you want or slightly above what you want and anticipate getting nearly a full allotment, because $1 billion worth of shares is a lot to raise in this IPO. And that's why you see Robinhood doing a lot of marketing of this thing, because they have a lot of shares that they need to distribute. Next week, we'll probably see Vlad and the Robinhood team on the NYSE floor promoting this thing. And once it's trading, this fund is available to everyone. So you have an advantage if you're a Robinhood investor and you want to invest in this fund for the long term. Get in at the IPO price where everyone else, all the other market participants, cannot. So that may be a short-term opportunity. It may not. This is going to get a lot of criticism as well. I'm not here to recommend investments to you, but if you're going to invest in this fund, make sure it meets your investment objectives. Robinhood's RVI, Fundrise's VCX, and the DXYZ, the Destiny 100 Fund, these are closed-end funds. They're not ETFs, and I've mistakenly referred to these funds as ETFs in the past. Even though these are funds and they are exchange traded, they're not exchange traded funds. So I want to clarify this distinction because it matters for how you think about this investment. In the financial and regulatory world, ETF has a very specific meaning. It's not just any fund that trades on an exchange. A true ETF has a built-in mechanism where large institutional players, called authorized participants, can continuously create and redeem shares. That process is what keeps an ETF's market price locked tightly to the actual value of its underlying assets, usually within pennies. As we've talked about quite a few times, DXYZ doesn't work that way, and neither will RVI or VCX. These are closed-end funds whereby they issue a fixed number of shares at the IPO, and then there's no ongoing creation or redemption mechanism. Nothing forces the market price back toward the fund's net asset value or NAV. And that's why closed-end funds routinely trade at significant premiums or discounts. And I've talked about this dynamic both last week and in episode 33, so check those out. So when you buy RVI or VCX, you're not paying fair value for the assets inside. You're paying whatever the price the market feels like charging that day. The right term is listed closed-end fund. It's going to trade on the NYSE like a stock or like an ETF, but the pricing dynamics are fundamentally different from an ETF. When you look at the SPY ETF, that's going to trade very close to its net asset value based on what all the other stocks are doing. But since these funds have non-traded assets as the underlying assets, the value can't possibly be equal to the net asset value at any given point. That's why we see a lot of volatility in these types of assets. We certainly saw it with the DXYZ when it opened. So I expect to see a lot of volatility in RVI and VCX when they open and for a considerable period afterwards. Let me give you my take on this fund, because after a week of thinking about this, my views have changed a bit. So I'm going to tell you what I'm doing and how I think this is going to turn out over the long term. First of all, I'm very happy to see this innovation and more retail access to these funds. Ideally, there'd be no accreditation standard and it would be easier to invest in pre-IPO companies, or these companies would IPO sooner and we'd all be able to invest. That's not how things are right now. So this is a way for retail investors to get exposure to these companies that they want to own own. Robinhood has said that the companies that retail investors are really excited about owning, they are having conversations with those companies. And so you can assume that some companies that maybe are on your radar as top startups could end up in this fund or the Fundrise Fund, or could already be in the DXYZ. These are very high risk investments. So only invest in this kind of asset with money you can afford to lose. Expect short-term volatility, and if you don't have a stomach for volatility, then you should not be investing in these assets. Expect more criticism and bad press for these funds. There's plenty of critics out there, so expect to see more of that. But I'm taking a long view on these assets, 5 to 10 years. That's how I was investing in the Fundrise Fund from the beginning. That's how I invest in the ARK Venture Fund. I was buying that as a 10-year holding minimum. So I'm going to continue with that sort of long-term outlook. And when you zoom out and your outlook is longer term, I think there's more clarity. I do think there's an opportunity for long-term appreciation. In the meantime, professional traders, algorithms are going to be participating in these funds. So either you have a long-term outlook to 5 to 10 years, or you're a trader. I would not be trading this if I was an amateur investor or a typical retail investor. Now, in terms of where I think the future is headed with these funds, the pre-IPO secondary marketplaces have a lot of data, and there are these data aggregators out there putting a value on the share of a private company on a daily basis. I've shared a lot of screenshots of a company called Caplight where I have access to some of their data. There's another one called PM Insights that has very good data. Notice.co is a free one that you can get on the internet. And so there are these professional data gatherers that put an estimated price onto these share values. So I think there's an opportunity for algorithmic traders, professional traders to buy and sell these funds based on what they're seeing in the pre-IPO marketplaces. They would need to buy a data feed and build some fancy algorithm. As these funds grow and mature and they settle out after their IPOs and get into a rhythm of trading, I expect that maybe these algorithmic traders, the professional traders, may start to take over and start to provide market making on these funds. And when the aggregate value of this fund is anticipated to grow in the future, the market's going to reflect that. And the longer that these are public and the more stable they've become over time and the more investors and the larger they get, I do think the market is going to do a pretty good job of valuing these over time. We may see short-term imbalances like we saw when DXYZ started trading, like we'll probably see when RVI starts trading. Every quarter, they're going to report the net asset value. And I think over time, the traded value of these companies is going to get closer to that net asset value. It's not going to be perfect. It's never going to be perfect. But generally, I think when the pool of investments is growing, that the market is going to accurately reflect the value over time. It's not going to happen right away, but the fact that these three funds, VCX, RVI, and DXYZ are doing this, and I think we can anticipate more are going to come into the marketplace, I think this will over time become a valid investment for long-term retail investors. I've talked about how the DXYZ, how the net asset value doesn't match the traded value, and I think we saw a good example of this in the last few months because the net asset value on September 30th was 11 something. And at that point, SpaceX was worth about $400 billion. But by December, SpaceX was worth $800 billion. And you can see that the traded value of that ETF reflected that, certainly upon the announcement of that SpaceX valuation increase. But the markets have a way of pricing things correctly over time as these securities mature. Now, we're in this warm, fuzzy period where private assets are growing pretty consistently with AI. The real test for these funds will be a 2022-like decrease both in the public markets and in the private markets. There were a lot of overvalued companies in 2022 and their private valuations plummeted. And we're seeing some inflated values in the companies in the RVI fund. Ramp recently increased its valuation pretty significantly. Revolut is a $75 billion company that's increased dramatically recently. Databricks is now a $134 billion company. So we're seeing these dramatic increases, and Robinhood has bought these toward the tail end of those high valuations. So if we do see a 2022-like decrease in the value of both public and private holdings, that's going to be the true test for these funds when they're public. It will also be interesting to watch these funds when they announce a new holding. Robinhood just announced that they've acquired shares of Stripe, or they plan to. What happens when some of these other hot private names like an Anduril or an OpenAI or Anthropic join the RVI. They're already part of the VCX fund or the Fundrise Innovation Fund. But upon the announcement of acquiring a new holding, how's that going to affect the traded price? We don't know yet. So looking ahead, I see accurate reflection of the net asset value as driven by the market forces. And I think stability and maturity and the size of these companies growing will help with that over time. So regarding VCX, I already hold a substantial stake in that fund. I purchased more shares last week after the announcement, and I think that window is closing by the end of this week. There's not going to be an opportunity to buy any more shares. And after doing this research for a week, I have decided to vote for the recommendations set out by the Fundrise management. I am voting for this to happen. I think it's the right move at this time. I will hold the shares through the lockup period and see where it trades. At this point, I can't tell you if I'm going to buy more in the public markets. I don't know. My guess is I probably won't, especially if there's a premium on the net asset value. But it's possible that I'll buy more as long-term holdings when I think the price is fair. As for RVI, I have made a request for shares on the Robinhood trading platform, and I'm expecting to get a pretty good allocation of my request. So my request reflects the amount that I want to own and not too much more than that. After the IPO and the broader market can start to invest in this thing, there might be a short-term opportunity or an arbitrage opportunity getting in at the IPO price and holding through the Robinhood flipping period, which is 30 days, even if there's volatility to the upside, because I abide by the flipping policies. Most of all, I'm just excited to see what happens with this. Robinhood doing this is a big change for the industry. It brings legitimacy to what the DXYZ already did, and Robinhood and Fundrise is going to strengthen that legitimacy even more. As for DXYZ, I don't own it and I don't plan to own it. The other two funds, I think I have maybe more of an advantage investing at the IPO or already holding it, and I'll be keeping an eye on DXYZ. That's very heavily weighted toward SpaceX. Even though I'm sort of turning on the DXYZ and I'm a little more open to it now, I won't be buying that fund unless in the future there's maybe an opportunity to buy it at a fair value or below fair value. Let's move on to IPO Radar news. Defense tech is one of the hottest sectors out there, maybe behind AI and data centers and chips for AI and data centers. Defense is a $1 trillion plus annual total addressable market. And globally, it's primarily still dominated by these legacy companies that are bloated, that are slow to manufacture and slow to new technologies. So there's been this opportunity for startups to really surge in the space. In addition to this bloated industry that's set for disruption, we're seeing companies deploy AI and autonomy and space technologies that are all converging into this defense tech sector. And retail investors are noticing and they want to invest. So the first company I want to highlight today is Shield AI. Shield AI is a defense startup building the world's best AI pilot for the U.S. military and their allies across the globe. Shield AI is in talks to raise $1 billion at a $12 billion valuation. And that would more than double its valuation in less than a year, according to this recent report. The new round would value the company at up to $12 billion after the raise. It says the size of the round underscores how strong investor interest remains in both defense technology and all things AI. Shield makes AI-powered software to run autonomous vehicles and hardware like drones. I've covered this company for a long time, and I wasn't really surprised to see this because of the enthusiasm for defense tech. And the next company I talk about is going to be the one that's really generating the most buzz. There's a company in Germany called Helsing that's also growing very quickly and gathering a lot of attention. There's another one I've covered called Saronic. They make autonomous sea-going vessels, and with humanoid robotics and drones in the military, these sci-fi nightmares that we saw in Star Wars and other movies could be coming to life. It's rather terrifying, but that's where we're headed. Hopefully these AI drones and robots are more of a deterrent than an offensive weapon that bad actors use to disrupt world order. The second company I want to talk about is really at the forefront of this whole defense tech resurgence. Anduril is an IPO wishlist company for 2026. It made my upcoming IPOs list as well. And the story broke out of the information that Anduril is in talks to raise billions in new funding at a valuation of at least $60 billion, including the new investment. This number, $60 billion, is really no surprise to me because I'm looking at Caplight right now and I can see that the company is estimated at about $100 a share or $75 billion. So the secondary marketplaces are already valuing this company significantly above this funding round. And this is another example of how private valuation can surge before the public catches on. Anduril raised in February of 2025 at a $30.5 billion valuation, and now it's worth $75. So if this were in one of these venture capital closed-end funds, that fund would potentially have appreciated from the net asset value. Regarding this story, the funding would give the company more leeway to fund its major weapons manufacturing facility, which we knew they're already building, and the development of an autonomous fighter jet. It expected to double its revenue last year to roughly $2 billion from contracts with the Department of Defense and U.S. allies. It's also burning a lot of cash. The founder of Anduril is, of course, Palmer Luckey. He's done several interviews over the past year, and the reason I put it on the upcoming IPOs list is because Palmer Luckey has stated that if his company is getting government contracts, he thinks that the public should be able to invest in the company and hold the company accountable as shareholders. Talked about Palmer Luckey last week. He also started a bank, that's Airbor Bank, that we expect to see grow, and Anduril will probably become one of his first customers. Still a young guy in his 30s, and he's really making a lot of waves. He previously founded Oculus Rift. So Palmer Luckey is one founder that a lot of retail investors just want to invest in. So it hasn't been completely out of reach, but if you want a significant investment in a company like Anduril, shares are very hard to come by in the secondary marketplaces, and you can see from that cap-light valuation, there's already a premium on the valuation that the company is seeking in this next funding round. The good news for accredited retail investors is we may start to see opportunities to invest in this company on the platforms as it's raising money. If they're raising enough money, which could be several billions, that could mean an opportunity for some of the platforms to get access to some of the shares, build an SPV, and invite investors to invest maybe for a $25,000 or $50,000 minimum. That's all speculation. I don't know that it's happening, but typically when we see news like this that is very high profile, raising funds, then those opportunities can arise. However, the VCs really want to invest in this company as well, and they may elbow out anybody who wants to invest. So I expect the top tier venture capital firms to be investing in this round. I also expect to see the valuation close at higher than $60 billion. We're already seeing it $75 billion on Caplight. When there's a queue of high profile investors and secondary investors and everyone down the line who want to invest in a company like that, the valuation is likely to increase, and they may increase the amount of money that they raise while the opportunity is there. That's all for this week's episode. Thanks for tuning in. As always, if you liked the show and you haven't subscribed yet, just hit that subscribe button if you're watching on YouTube, or a simple follow on Spotify or wherever you watch or consume your podcasts. Head over to accessipos.com, sign up for my free weekly newsletter. Comes out Sunday mornings. It's brief, easy to consume, unsubscribe anytime. You also get a free PDF download, and that PDF is called From Startup to Public Company, the IPO process. So if you want to learn more about the IPO process, check that out. And there's also a companion video now if you want to check that out. Last but not least, join the Access Club. That's our Patreon community if you want to up your game when it comes to IPO investing or pre-IPO investing. We talk about both in those forums. I write a few blog posts per week in there. There are chat rooms where we talk about upcoming IPOs, and RVI and Fundrise Innovation Fund are definitely two that we're paying attention to. If you have knowledge that you think could help investors, or you're looking to gain some knowledge from others, join our Access Club. That paywall that Patreon provides, it gives us everything we need to communicate inside the community, but it also blocks out all the anonymous trolls and the AI bots and all the nonsense that you see on the social media platforms. We're humans only, no robots in the Access Club. Join us. We'd love to have you. 7-day free trial. Check it out at accessipos.com and look for the red starburst, or patreon.com/accessipos. That's all for the show this week. Thanks for listening. Thanks for watching, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.